Welcome to the deep dive. Let's get straight to it today. Berkshire Hathaway. They're sitting on just a mountain of cash, a record $334 billion last I checked.
It's staggering.
Right. I mean, put it in perspective, that's bigger than Coca-Cola's entire market value.
Wow.
It's just, it's a huge sum. And it really begs the question, what does this pile of cash actually mean, for Berkshire and maybe even for the wider market?
It really is an extraordinary number. And look, it's the main thing everyone's talking about, especially Warren Buffett's followers, right? As they get ready for the annual meeting.
Yeah, the anticipation.
Exactly. The big questions, the burning questions, are all about how they're going to deploy this unprecedented amount of dry powder, cash ready to invest.
Okay.
So our mission today really is to dig into those questions, see what the implications might be.
Yeah, makes sense. Everyone's waiting to hear what Buffett thinks, especially with, the economy being what it is.
Yep.
Having this much cash just makes his views even more critical. So, okay, $334 billion. How did they even get there? How does that happen?
Well, how it grew gives us some clues, I think. Last year, Berkshire was a net seller of stocks. Big net seller.
Yep.
We're talking $134 billion more sold than bought.
Wow.
And at the same time, they pretty much stopped their share buyback program, or at least slowed it way down in the second half of the year.
So less money going out, more just piling up.
Exactly, leading to this huge accumulation.
It really makes you wonder what they think about the market right now. It feels very deliberate, like they're holding back.
It does.
And it's hard not to think back to 2008, right, when Buffett wrote that famous Buy American, I Am op-ed.
Right, during the crisis, a real signal.
Yeah, a signal of conviction when things looked grim. So does this huge cash pile now maybe hint at a similar kind of opportunity coming? Or is it something else entirely?
That's the $334 billion question, isn't it?
Yeah.
Looking at Buffett's history gives us some context, for the possibilities. Acquisitions are always high on the list for Berkshire.
The blockbuster acquisition.
Could be, if they find the right company at the right price. His criteria: durable competitive advantages, good managers, fair valuation.
Right, the classics.
Exactly. And maybe in this environment, you might think about infrastructure or energy, things with long-term stability, especially if prices get more attractive.
A huge deal like that would definitely make waves. But, okay, what about just buying stocks? That's another obvious use, isn't it?
Oh, for sure.
Especially since the market took a bit of a dip back in April.
Precisely. The idea that Berkshire might be, scooping up stocks when things get cheaper is very natural.
Yeah.
Actually, finance professor David Cass asked that exact question. Like, has Berkshire already started putting cash to work after that April dip?
That's a key question. A lot of people want to know that.
It is. Because if they are buying, that says something about their confidence, doesn't it?
It signals something, yeah. Long-term confidence. Okay, so acquisitions, stock purchases. What about share buybacks? They slowed down last year, you said?
They did. But they could easily ramp those back up.
Right.
That usually makes shareholders happy.
Returns capital, boosts earnings per share, potentially?
It can be effective, yeah. And then there's always the D word, dividends.
Dividends from Berkshire. That would be quite a change, wouldn't it?
It really would, a major shift.
They've always seemed to prefer reinvesting, finding those big deals.
That's been the philosophy, absolutely. Buffett's been pretty clear about preferring reinvestment over dividends historically. But, with this much cash, maybe the math starts to look different.
Maybe.
And related to that, Alex Morris had an interesting question about whether Buffett still sticks to that, $30 billion minimum cash level he used to talk about.
Oh, right, the safety net.
Yeah, because if he does, the amount available above that is just immense. Morris also wondered, how big could their biggest possible deal actually be today? Just highlights the firepower.
It really does. All these possibilities just crank up the anticipation for what Buffett might say. Bill Smead put it pretty directly, didn't he?
Yeah, his question was great.
Basically, why sit on all this cash? And how far does the market have to fall before you write another Buy American piece like in '08?
Gets right to the heart of it. People want to know his trigger point.
They want to understand his market view, what makes him pull the trigger on big investments.
Exactly. Smead's question taps right into that desire to understand Buffett's mindset in tough times and maybe spot similar opportunities yourself.
Right. It connects directly to what you listening might be thinking about your own strategy when things feel uncertain. Okay, so beyond deploying the cash, what else are investors focused on? The broader economy seems to be a big one. Tariffs, for instance.
Oh, absolutely. Tariffs are back in the spotlight, and that brings up worries about inflation, maybe even recession. So naturally, people wonder how trade policies are hitting Berkshire's businesses, which are so diverse. Stephen Check asked about the current impact, the future impact, globally.
And it gets specific, too. Adam Mead brought up solar projects.
Right, how tariffs could mess with the economics of Berkshire's solar investments, because they probably rely on equipment from overseas.
Shows how these big policy things can trickle down to specific business calculations.
Definitely highlights the connections. Global economy, domestic projects, and Adam Schwartz asked if Buffett sees tariffs as more than just temporary noise. Like, is it a fundamental structural change?
And how do you handicap that risk?
Yeah, how do you assess the downside? And John Longo was curious about Buffett's current take on the U.S. trade deficit overall.
It all just emphasizes how much investors see Berkshire as tied to the whole U.S. economy, right?
It really is like a microcosm sometimes. What affects the U.S. economy? Well, it tends to affect Berkshire.
Okay, let's shift gears slightly. One specific huge investment, Apple. They sold a lot last year, didn't they?
A lot. Yeah, but 67% of their holding in the first 9 months of 2024.
But then they held on to the rest.
Interestingly, yes, they kept around 300 million shares through the fourth quarter, even though the stock price went up then.
Which is the puzzle, right? As Adam Mead called it, the $60 billion question. Why not sell it all if you were selling so much already?
It seems a bit inconsistent on the surface, yeah. Raises questions.
What's the thinking there?
Darren Pollock had a similar thought. What's the rationale for keeping that remaining chunk, especially with Apple's stock down a bit this year? It suggests there might be something else going on strategically, maybe just maintaining some tech exposure, or maybe still a deep belief in Apple long term, despite trimming the position.
It's definitely a classic Buffett move that keeps people guessing. You assume there's a good reason, but it's not immediately obvious.
There's usually a deliberate logic, yeah.
Okay. And finally, inevitably, succession. Buffett's 94. Greg Abel is the designated successor. People want to know more about him.
Absolutely. Succession is always on investors' minds. They want to get a sense of Abel's vision for Berkshire.
What's his plan?
Right. Lawrence Cunningham and Luke Robari raise key questions there. Like, how will Abel maintain Berkshire's core values, its culture?
And crucially, capital allocation.
Exactly. How will his approach to picking stocks or making acquisitions compare to Buffett's legendary style? That's vital for the company's long-term future.
It really is about continuity, isn't it? Will the magic formula, so to speak, carry on under new leadership? It's a critical time.
It is. So look, it all circles back to this massive cash pile. What does it really signal for Berkshire's strategy?
Yeah, what's the next chapter?
Is it going to be a giant acquisition, a renewed push into stocks, more money back to shareholders, some mix? And how do things like tariffs or interest rates play into that decision?
The scale is just immense.
$334 billion. It's enough to really move the needle, not just for Berkshire, but potentially for whole market segments.
It absolutely is. So thinking about Berkshire's history, Buffett's track record of being patient, then acting decisively, what do you listening think is the most likely way they'll deploy this cash? And maybe what are the little signs, the signals in the market that might tell us a big move is coming soon? Definitely something to keep a close eye on. Thanks for taking this deep dive with us today.